In this video I will show you the best Forex trading strategy ever, or at least some of the elements that can be considered part of a professionally designed strategy to approach the markets. In this particular video, we will be looking at the EUR/dollar 5-minute timeframe, and we will once again be looking at a subtle flow shift in the markets. Beyond that, we will also take a look at the concept of mirror lines and extrapolated support and resistance lines, which are more advanced topics. Before number 0 on this chart, you can see red lines marking the downward vectors of the euro-dollar. This part of the analysis is quite simple because we can quickly identify the dominant market player by looking at the relationship between highs and lows. In the red lines, you can see the euro-dollar generating lower highs and lower lows. For all intents and purposes this means downtrend. However, in the financial markets things are never that simple, unfortunately. As you are about to find out in this market analysis, the subtle flow shifts of the market depend on a series of subjective interpretations of nuances in price action. In mark number 0, we have a fractal candle that can potentially signal the very beginning of an uptrend in this case. This is too early to judge if that's going to be the case, but we should at least mark that out in our chart. This market began to look a little more interesting in the number 1 through 4, which is an expanding pivot formation. In this case, it's an expanding pivot formation because a higher high in number 3 is immediately followed by a lower low in number 4. Expanding pivot formations are especially tricky to analyze because they create some sort of dissonance in the basic way of analyzing trends, which is to count market vectors to see which market player has been dominant so far. There is a very important detail here that probably passes right through most of the traders in the market. Observe that low number 4 lands somewhere around the small consolidation area that happened right after the fractal candle number 0. That's a weird thing to happen in a downtrend because a small consolidation like that should not be able to stop dominant sellers from creating lower lows, especially at the end of an expanding pivot formation in number 4. That's our second clue so far. Observe that I marked a horizontal blue line with the label proven pack of sellers, which was the last time that sellers won the battle against buyers in the euro-dollar and generated the last market vector down before fractal candle number 0. Observe also that in 5 through 7, the market approaches this horizontal blue line, which forces us to make some sort of subjective decision about the dominant player in the market. Once again, objectively speaking there is no way of determining that. However, subjectively speaking we already pointed out 2 clues that might indicate the buyers are actually stronger, and the market has shifted its flow to the upside already. The market vectors between 5 and 8 create a quite unique situation that once again might have been invisible to most retail traders in the market who are looking for simple tricks to get in and out of the market without actually thinking about what's going on in the charts. Notice that 5 through 8 is also an expanding pivot formation because 7 is higher than 5, and 8 is lower than 6. The first interesting thing about this is that this second expanding pivot is about 30 candles long while the first expanding pivot we recognized was only 10 candles long. This basically means that this market is picking up energy. That's good, but we don't know to which direction this energy is likely to be going. One thing we might infer from the relationship between these 2 expanding pivots is that after each subsequent expanding pivot formation, the market tends to rise like happened one time already. In number 7 we can see that the market tested the line of proven sellers 4 times as it was marked by the red arrows pointing down. We can also see that the market didn't close above the high number 5. That's a contextual element for a sell position idea that could have been placed around the red arrows without any problem, but once again, that would be the extremely obvious trade in the chart. If you have been following these videos for a while, you probably have been able to recognize that usually the non-obvious details tend to matter more in the market ironically. If we look at the momentum interpretation using the relative strength index, we will see a hidden divergence happening between 4 and potential low number 8, and we will also be able to see a small reversal divergence before 8. That's a contextual point for the buyers of the market, of course. Another important aspect of this market dwells in the green horizontal box that comes out of the first expanding pivot from 1 through 4. Observe that this green box is analogous to the small red box around numbers 2 and 4, and take a look at what happened when the market landed inside the red box in number 4. This is apparently what this market wants to do in number 8 too. Let me grab your attention to the upward and downward lines of both red and green boxes. The upper line of the red box is the turning point level after fractal candle number 0, and the downward line of the red box is the point of ignition that happened 2 candles after fractal candle number 0. Once again, the green box is analogous to the red box. The upward green line of the green box comes out of the turning point line that happened in candle 4, and the downward green line comes out of the point of ignition that comes out 1 candle after candle number 4. Here I want to introduce an idea that you might not have heard before, which is the idea of mirror lines and extrapolated mirror lines. Observe that number 5 serves as an axis to draw 3 different lines in this chart. Mirror line 0 is a horizontal line that comes out of number 5, and it serves as a base to draw the other 2 lines. Mirror line 1 is a sloped line that connects highs number 5 and number 7. In case you are wondering why we connected these 2 lines, remember that 7 is a subjective violation of number 5 because price surpassed it but it didn't close above it. Beyond that, this angle might tell us about the angle in which buyers might be operating in the market. Mirror line -1 is the exact same angle produced between mirror line 1 and 0 but mirrored to the downside. The reason we mirror these lines in such a way is to try to calculate the extension of the seller movements using the extension of buyer movements as an axis. The fourth red line called extrapolated mirror line is drawn respecting the same angle from mirror line -1, but it comes out of low number 6, which is our most recent significant low. If you observe carefully, the extrapolated mirror line intersects with the low of the candle that landed in our green box in number 8. These lines are without a doubt an advanced concept that will be covered in the Hidden Lines course, but hopefully you will be able to get the general idea behind them. You must reverse engineer the market to find such meaningful lines. We can find yet another contextual element that tilts our bias to the upside, which is the Fibonacci extension applied to the price extremes number 5 through 7. Notice how our candle number 8 lands exactly at the expansion level 161.8%. To sum up, we have the following elements converging to the exact same point in the chart. Price landed on our green box, which is analogous to the small red box using the expanding pivot formation that we talked about. We have a combination of a hidden divergence happening with a reversal divergence in the relative strength index. We have candle number 8 landing precisely in the extrapolated mirror line. We have candle 8 landing exactly in the 161.8% Fibonacci expansion level, and finally, we can see that candle 8 has a lower tail that implies buyer power is greater than seller power in that candle alone. The position you see opened in the chart was triggered at the open of the candle next to the candle 8 with a stop below low number 4, which is the nearest solid market structure available. The target was placed with a 1:5 risk-reward ratio because if we happen to be correct in this flow shift reading, we are in the beginning of an uptrend, so we can place a less realistic risk-reward ratio and expect it to hold. Let's see how the market turns out, and then I want to show you one last thing about the mirror lines I described to you in this example. Here we can see that our long trade position hit its target, but I want to grab your attention to the awesomeness of the extended mirror lines. All these upsloping red lines you see on the chart have the exact same angle as the line we draw from high number 5 and high number 7. Look at how price continues to respect the angle of this line for many candles after the origin of the mirror line. Notice also that these lines act as sloped support and resistance lines, as you can see by the red arrows pointing to the times the red lines were tested. These lines can act as an extra layer of confirmation for your trade contexts. I hope you were able to recognize the power of these tools. However, before attempting to draw these lines on your own charts, remember that they have a correct place to be drawn, and they will not work unless you read the market logic correctly. That's it for this video. If you enjoyed this market analysis, please hit the like button, subscribe to our YouTube channel, and leave your feedback below in the comment section. Thank you for watching and I hope to see you in the next video.